Bank of America, founded in 1904, stands as one of the largest banks in the U.S., serving millions worldwide. It operates across four main segments: consumer banking, global wealth and investment management, global banking, and global markets. This broad reach allows it to serve over 46 million consumers and small businesses in more than 35 countries. Investors are drawn to its stability, strong brand, and commitment to digital innovation. The bank generates revenue from interest on loans, wealth management fees, and trading activities. Its diversified income stream helps reduce risks during economic downturns. Strategic investments in technology, like AI for fraud detection and digital banking, boost efficiency and customer experience. However, Bank of America faces industry challenges including regulatory pressures and competition from fintechs. Understanding these dynamics is key for anyone considering the bank as a long-term investment. Let's explore what makes Bank of America a compelling yet complex investment option. Bank of America's diversified operations are a major strength. Its presence in multiple financial segments attracts a wide customer base and stabilizes income during economic shifts. The bank's global reach opens doors to emerging markets and new growth opportunities. Heavy investment in digital innovation, like AI-driven fraud detection and QR code sign-ins, sets it apart in customer service and efficiency. In Q1 2025, Bank of America reported 90 cents earnings per share and $27.4 billion in revenue, surpassing expectations. This financial strength enables continued investment in growth and shareholder returns. As the second-largest U.S. bank, its strong brand and reputation inspire confidence among customers and investors. These strengths position Bank of America as a leader in the evolving financial sector. Its focus on technology and global expansion keeps it competitive in a rapidly changing market. Despite its strengths, Bank of America faces notable weaknesses. Declining net interest margins, due to higher deposit rates and slow lending growth, have squeezed profitability. The bank's exposure to real estate and potential loan defaults during downturns increases risk. Regulatory pressures add to operational costs and can limit growth opportunities. Adapting to changing compliance standards often diverts resources from innovation. Over the past 3 years, Bank of America's stock returned 3.06%, underperforming the S&P 500's 27.83%. This underperformance highlights the need for strategic changes to boost shareholder value. These challenges underscore the importance of robust risk management and forward-thinking strategies. Investors must weigh these weaknesses when evaluating the bank's long-term potential. Bank of America competes with giants like JPMorgan Chase, Wells Fargo, and Citigroup. JPMorgan leads in investment and consumer banking, with a 32.76% one-year return, but faces market volatility and regulatory scrutiny. Wells Fargo excels in retail banking and wealth management, yet its growth is capped by Federal Reserve restrictions and declining net interest income. Despite these hurdles, Wells Fargo posted a 26.59% one-year return. Citigroup's global reach and wealth management are strengths, but its limited U.S. retail presence and restructuring challenges persist. Citigroup achieved a 20.79% one-year return, reflecting ongoing efforts to improve. Bank of America's diversified portfolio and digital innovation give it an edge over Wells Fargo's regulatory issues and Citigroup's retail weaknesses. However, JPMorgan's scale and dominance remain a significant challenge. To stay competitive, Bank of America must continue to innovate and adapt. The banking landscape demands constant evolution to maintain market position. Understanding these rivalries is crucial for investors assessing Bank of America's prospects. Bank of America's recent financials highlight its resilience. In 2024, the bank posted a net profit margin near 25% and $94.6 billion in total revenue. Its strong capital base, with an 11% Common Equity Tier 1 ratio, provides a buffer against economic shocks. Debt rose to $334.3 billion in 2023, reflecting strategic investments in operations. With over $1 trillion in cash reserves, the bank maintains robust liquidity for uncertain times. Tangible book value grew 10.5% in 2023, underscoring financial stability. In 2024, Bank of America offered a 2.3% dividend yield, appealing to income-focused investors. Consistent dividends and solid performance reinforce its value proposition. These financial strengths support the bank's long-term growth and investor confidence. Bank of America's stock market journey began with its 1978 IPO. 3 stock splits since then have made shares more accessible, with one pre-1986 share now equal to 8. The stock's performance has seen both highs and lows. In the past year it returned 1.45%, outpacing the S&P 500's 37.77%. Over 3 years, however, it lagged with a -3.06% return versus the S&P's 27.83%. Dividends remain a consistent feature, with a 2.3% yield in 2024. This mix of volatility and steady income highlights both the risks and rewards of investing in the sector. Investors must weigh the potential for appreciation against the cyclical nature of banking stocks. Understanding these trends is vital for making informed investment decisions. For Bank of America's stock to hit $1,000, it would need to grow over 22 times its current price. Achieving this by 2030 is highly unlikely. Even by 2040, it would require extraordinary growth and transformation. Expansion in wealth management, fintech, and emerging markets could drive growth, but major operational changes are needed. By 2050, reaching $1,000 is more plausible, but still challenging. Dominating fintech, leveraging AI, and adopting blockchain could be key drivers. Regulatory changes and economic cycles remain significant obstacles. The bull case sees massive upside, but risks from competition and downturns are real. Investors must carefully consider these factors when evaluating long-term prospects. For significant growth, Bank of America must embrace future-focused strategies. Investing in AI, digital banking, and expanding wealth management will be crucial. Exploring blockchain and ESG products can tap into new markets and sustainable finance trends. Geographic expansion into Asia-Pacific and Latin America offers further growth potential. Despite the ambitious $1,000 stock price goal, challenges like regulation and competition persist. Strategic innovation and adaptability will determine the bank's long-term success. Investors should balance the bank's strengths with potential risks. Staying informed and proactive is key to making smart investment decisions in Bank of America's future.